Oh. 2 minute chart doing the same kind of thing, going back and forth, back and forth, back and forth. All in all, we're kind of making higher lows, right? So notice for no, are you guys, can you guys see this chart? Yeah, you guys can see the chart. Notice down at the bottom when we first started the day, we have that initial low, and then we kind of put in the pop and we pulled back, right? Higher low. We put in a new high, pulled back, higher low. We put in another attempt at trying to break the highs. We did not. And then we put in this pullback. Now, each of these three big pullbacks are all putting in higher lows. So you have to respect the trend, right? You have to respect the trend to the upside. It looks very clear on the 2 minute chart. This trend looks very clear. Price action is not real smooth, but you do have to respect the trend. Now, if we were to break a prior low, then we can talk about potential downside. If we were to break a prior low, then we talk about potential downside. If we break a prior low, we talk about potential downside. But until that happens, your better bet is to just look for those pullbacks, look for that consolidation, and either get in off of some type of support system, some type of floor. You can see here starting to pop up again. Let me go back to the 5 minute time frame because that's what I've been working on today. So again, even on the 5 minute time frame, you can still see, right? You can still see these higher lows, starting off here, here, and here. We just, on this last, stand, we have failed to put in a new high. Now, if you're still trading, we got to start analyzing what our P&L is, right? So on one of my accounts, I can only speak for myself. On one of my accounts, it's up $540. I started off the day on the right side of the trade. Playing mini contracts, again, a lot more risk on the table, but congratulations, Husky. That was a good move. 2 minute, I'd seen that one setting up. So being up 540, what I'm going to do now is start to manage any future trades against this active P&L. So there's no shot in hell that I'm going to go from $540 to zero. Why? It's entirely possible, but if I limit my risk and limit my size and I trade against the P&L and I give myself, let's say $200, $250 of max drawdown on any future trade, well, then if I lose the next trade I take, I stop trading altogether. That's to protect that P&L. That's typically how I do it, and that's typically how I can try to keep green days green versus green days into red, because it's very easy to be up, let's say for example $500, lose 200, and want to get back to that $500 mark. But again, until the day is over and until the market is closed today, that money's not yours. It's still unrealized. Even though you're out of the trade, it is still unrealized. It doesn't become realized until this day's session ends, and then you go into after hours and a new session starts. Then that would be a new day. So technically, whatever you see on your screen is unrealized until you start that next session. So the goal here is to always try to protect what you have this session, right? So I start to get a little bit more picky. The more trades that I do win, or the higher the P&L goes, I will get extremely more picky with my setups, and I will definitely size down. Okay, I will definitely size down. And I will look to only risk half of whatever I'm up. And that's one tip that you guys can maybe incorporate into your guys' trading. Kind of protect you a little bit, because that's the name of the game, is protection, right? We want to protect what's ours. So just to kind of reiterate what I have on my screen, I've got 30-minute opening range low, 30-minute opening range low down here at the bottom, 30-minute opening range high. I've got high of day, and I've just got this little last swing low marked out here. That's it. So right now, this price action is pitter-pattering around this 30-minute opening range. Now we've closed over the 20 SMA. We've got a little bit of a wick here. If this does get confirmed, maybe there's enough space here. And again, I will play micros, right? I will play micros. Put my order out there. I will play micros, and I will look for a 10-point take profit. I will use, if this triggers me into the trade, I'll go, I'll explain when it triggers me in, but what I will use as a stop, the previous candle is 36 points, so I will make a decision on a stop loss if it closes below the 20 SMA, or I will give it the full range, 36 points. Now, again, if you're trading mini contracts, 36 points is way too much to risk on one particular trade. It's not going to happen, right? It's not going to happen. So what I will then do, I'm currently in the trade now. What I will then do is on a 36-point stop loss, I'm risking around $70 a micro, and I'm playing 2 micro, so it's $150 max risk. Now again, remember, I'm managing that $150 max risk against this 540. If this trade doesn't work out, right? If this trade doesn't work out, I'll be done on this particular account. I'll go to another account and trade it. That way I don't feel the need to want to trade more and, you know, try to get something back. You know, it is what it is. A 10-point take profit still keeps me below the prior swing lows, so maybe it's got a good chance of hitting, and it still keeps me below a lot of these supply zones. So when I look at it, right, if I've got the high of day sitting up here at 19,694, it keeps me below that. So if this does continue to push, I have a better probability of getting that 10-point take profit tagged before the high of day sellers come in, right? If they're not going to push this higher. Now, the high price on this 20 SMA play was sitting at 19,663, and we've gone up to 19,673. Now, obviously, a lot of times by the time you get in, there's a little bit of slippage there. So you're not always going to get it right at that mark. 2, if you were looking for just the 5-point take profit, you should have made money just on the quick wick up, right? So 19,663, high price was 19,673, should have gotten hit for a 5-point take profit. So if any of you guys out there are trading a little bit bigger size, then your 5-point take profit should have been hit. And I'm awfully close to getting the 10 points. It's not much. Again, we're not trying to make $1 million on this one particular trade. We're just trying to add to our P&L. That's it, right? An extra $20 here, an extra $30 here, an extra $40 there. Especially when you're already profitable, definitely pays off, right? Now, if you are in the trade and you're feeling uneasy about it, definitely get out, right? You should still be in the profit, or you should still be flat. Just get out if you're uneasy about it, right? There's no one forcing you to be in the trade. The biggest things you got to do is just be patient, right? Allow the trade to work, right? Allow the trade to work. There's never a certainty that your trade is going to win. There's never a certainty that your trade's going to lose. So at the end of the day, why do you need to be and put yourself in a situation where you're stressed or you're nervous or you're anxious, right? It's just a trade. There's going to be another trade. There's always going to be another trade, right? Only thing you can do is just protect your downside risk by knowing how much you're going to risk on that one particular trade, okay? That's all you can do. The only thing about this trade is that it is lunchtime, right? So if I could just explain a couple of things. It is lunchtime. And if you were to draw like a little trend line from high of day to this lower high to this lower high, got a little bit of a downwards trend line, right? You got 3 multiple touch points. We broke it the first time. If this breaks, I would expect it to try to make an attempt to touch this high of day here, but we've got to get through. We've broken it once, but we've got to get through. So we've got 3 touch points here where I'd like to see this break through. If it doesn't, it'll just be a new lower high for a pushback down to the bottom of the range. And more than likely at that point in time, I'll be getting stopped out. All right. And there's that 10 points that just got hit. So 10 points just got hit. That last trade, $40. Not much, right? $40 winner there. But it takes our P&L up to $580 on the day. So that's 3 trades on this one particular PA account. It's a fresh PA account. It's not that old. Right now I'm at a point where I'm kind of forced to trade these newer PA accounts just due to the fact that I have 3 of them that are ready for a payout and I'm not trying to screw anything up. Curious to know if anyone took that 20 SMA play, whether it was for 5 points, whether it was for 10 points. Most of the time, yes. Nice. Good job. Again, my typical stop loss depends on a few things. Okay. So I run what I would call a dynamic stop loss, meaning every play, every trade that I take, it's going to have a different stop loss. Okay. And the reason why it's going to have a different stop loss is because the range of the candles are different, right? So for example, right now, the average true range of a 5-minute candle is around 35 points, okay? Now, that changes dependent on if I'm playing minis, which I normally will play 1 mini contract, or I'm playing micro contracts. If I'm playing, let's say, 1 mini contract, I'm only going to give myself, on average, because it does change, on average, I'm going to give myself between $250 and $300 worth of risk. Okay. So if we look at that scenario, I'm giving myself around 10, 12, 13 points of risk. And normally I'm trying to capture between 5 and 10. So my win rate is going to be high because when those trades do hit, right, I'm going to hit more trades at a higher frequency. But when I do lose a trade, technically I'm going to give back at least 2 winning trades. So automatically, a lot of people tend to think, well, that's an unprofitable strategy. I'm here to tell you that it's not, because if you do really manage, you're going to go on a string of 4, 5, 6, 7, 8, 9 winners in a row, and then you lose a trade. Sure, you give back 2 winners. So you have to look at it not on a trade by trade basis, but on a scale, on like a block, right? I look at my trades on a block of 10. What's my performance results on a block of 10 trades? What's my block of performance on a block of 100 trades? I'm trying to get to 100 trades and then analyze my P&L. That's all I'm trying to do. And normally in a month, I take anywhere between 60 and 75 trades. So I'll try to analyze it, out of around 50 trades and see what that P&L is. And that operates at around a 79, 82% win rate. But you got to be disciplined though. That's the only thing with minis, because you can get into a play on a mini contract and this thing can pull back on you 20 points and you're down $400. So at that point in time, you need to just stop trading on the day. But what tends to happen with, like 80% of traders is they take one more trade out of revenge or out of emotions, and then they fuck everything up, right? Now, if I'm trading micros, typically I'm going to use the reason why candle. So the candle that closed over my 20 SMA, I'm going to use that whole reason why. So this reason why candle was 36 points. Like as I explained before I got into that trade, I'm going to lose $70 per one micro contract. Great. But I'm only looking to play 2 micro contracts. So again, the risk to reward is a little skewed, but the win rate is going to be high, right? Now, again, the other stop loss that I could have used was just to close below the 20 SMA. That would have tightened up that 35 points worth of risk. And it is what it is. A PA account is just a funded account. So Apex prop firm calls them PA accounts, right? If you're on Top Step, they call them XFAs. It's just called a performance account. And again, for those of you guys who are kind of, if you're on, and sometimes when I'm trading micros, I might look for 15 points as well. I might look for 12 points, right? Depending on the momentum. But it's lunchtime, so I'm not really looking for a hell of a lot. And again, for people who do trade Apex, who are really, diving into the fine print of, you need to have a risk to reward ratio of no more than 3 or 4, this, that, and the other. Even if you put 10-point take profit and a 40-point stop loss, you're still, risking 4 to make 1, risking 3.5 to make 1. It's still going to be fine. Again, I've personally, knock on wood, I understand there's a lot of, stuff on social media going on out there about Apex and their payouts and this and that, some mass email that they send out yesterday. So far, I have not been denied a payout for working this type of risk to reward ratio. I've been trading with them for well over a year. I've taken multiple payouts with them. Again, I'm not claiming to take out $20,000 a month. I keep it steady Eddie over here with the prop firms, right? Very, very steady Eddie. So, 4,000, 6,000. I think the best month I've ever had with Apex was 4 accounts at $2,000 each, which was 8,000. Right. So I'm not looking to really, rob the bank here with Apex. I'm just looking to steady Eddie these accounts, add that to my bottom line. I trade options. Those of you guys who know me on a personal level, you guys know that I trade options. That's my bread and butter. That's how I pay the bills and survive. As far as which prop firm is the best, it's all personal preference, right? It all depends on what type of trader you are. I would recommend that if you're more leaning towards a scalper, if you're a scalper where you're getting in, you're getting out, see green, take green, go with Apex. Their accounts are a little bit cheaper. You can have up to 20 of them, right? Yes, they have 2 pay period cycles you got to kind of abide by. You have to trade for 10 days in between, but they're not going to really like you dollar cost averaging. So you can't really zone trade. It's very hard to kind of like I'll give you this example. It's very hard to trade Apex where you're in on this big long move here and then like your P&L goes up. Let's say you're up 1,000 here and then it pulls back and you're up 500, and you go up, you're up 2,000 here and then it pulls all the way back down to break even. because they have that trailing high watermark, right? From your high P&L to your low. So you can run the risk of being up in a trade and then giving it back, and then your account can be blown type of deal. So that's why it's more for scalpers. You know, see green, take green, you know, get back in, breaks 5 days, see green, take green. Like I think it's very good for that. I think Top Step is probably the next best in line. They just removed their $1,000 daily loss limit. So now you can have up to 2,000. You can get your full, you know, your full money's worth there. I think that's good for passing evaluations quickly because it gives you more room to wiggle with. You can play a lot bigger size, and you can dollar cost average, and you know, you can hold these trades. They're not going to dock you if your trade's up 1,000 and you take it for 500, right? Like they're not going to dock you. The other one that I like, and I'm probably going to start because I want to start diversifying a little bit more, is I like Take Profit Trader. I've been looking at them. I like what they're doing. It's another firm. It's been around for a long time. It's not as big. Take Profit Trader I think is really good. I know there's a few of my guys who trade with MFF. I haven't personally worked with them yet. And then you got a lot of these newer people that are raving about fast track trading, right? Where there's no evaluation stage, straight into the funded account. Obviously those accounts are a lot more expensive because you're just going straight to a funded account. But again, you know, dive into your research. I think it's whatever works best for you. You know, why do I use Top Step and Apex? I've used them for a long time. I mean, I was first funded with Top Step. Again, not the same account. I've had multiple accounts with them. I've obviously lost accounts. I've taken payouts with them. But the first time I was funded with Top Step was in 2021. So that's when I kind of started learning about prop firms a little bit, started getting into futures a little bit more. Again, before that, I've been trading options since 2015. So Take Profit Trader is good. I like them. They have a no bullshit payout policy. I like them a lot. They're an older firm. There's another firm that's out there. Again, I used them maybe a few years ago. They have a little bit different rules, but they're again another older firm. Earn to Trade is another firm that's out there. They're a little bit more expensive. They've also been around for a very long time. I like the companies that have been out there for a long time. I like to, you know, yeah, it's the same strategy for trading options. Same strategy for trading options. Only thing with options, the only thing with options, guys, is I'm going to use, I'm going to change this. I'm going to show you guys a little bit here. I'm going to use my big chart for trading options, and I'm really going to use the daily and the 1 hour chart to kind of get my levels, right? Whoops. So today, on the option side of things, we took Tesla long, right? So this is how I will look at my chart on Tesla, right, for options. So what I'm looking at here, right, I'll come into the pre-market. What I want to know, right, what I want to know is what is previous day high, okay, and where's the pre-market highs at. Those are the first two things I'm going to look at based off of, and I'm going to use the hourly chart to kind of do my research. So once I figure out what the previous day high is, that's going to be my measured potential. Once I find out what are we doing in the pre-market, I want to see what that pre-market high or low is. And then I want to see if we confirm pre-market highs, do I have room? Okay. Now, if we notice here, the pre-market highs was sitting at around 209.40. And that was sitting at a 50-day moving average. So on the 1 hour chart, you're looking at a 50 SMA. And above that, I have clear skies into around 212. So I ask myself the question, if this breaks pre-market highs, okay, I don't care if it's in the first minute, I don't care if it's in the first hour. If it breaks pre-market highs, do I have opportunity to move into the next area of supply of measured potential? Okay. So the answer in this question is going to be yes, because over 209 into 212 is more than enough money for me to get in, scrape off $1, $1.50 and get out. right? If there's $3 of measured potential from 209, which is supply, 50-day moving average and pre-market highs, into the next area of supply, which was the 100-day EMA on a 1-hour chart, then what I'll do is I'll look at the 5-minute time frame going into the market open, right? Notice the pre-market high. So pre-market is in the light shaded gray. Market hours are in the dark black here. Notice how this spike in the pre-market went right up to this blue line, okay? Went right up to this blue line. This blue line is a linear regression, okay? A linear regression channel. We've got one here, we've got one here, and we've got one here. There's just channels, okay? With the standard deviation in between them. So we've pushed right into this supply in pre-market. Now, above, do you notice how down here there's a bunch of these crazy different color lines, right? And this chart's going to be very confusing for people who don't know what it is, but again, just kind of bear with me here. Do you notice how there's so much different shit down here, right? So much different crap. These are all different levels of supply and demand. And again, I kind of explained yesterday on yesterday's stream or yesterday's call with some of my guys. I look at these different moving averages as buyers and sellers. That's it. I'm stupid. I just keep things very stupid simple. And I tell myself, okay, you know, all of these different areas are different buyers and sellers here, supply and demand, support, resistance, right? It's all the same shit. So if I clear out this supply, AKA if I clear out these sellers that are sitting above my head here in the pre-market, I've got space on the what, guys? I've got space on the hourly chart, which was 100 EMA, into 212, where if I pop pre-market highs, I can go into $212. That's my measured move. So immediately off the bell here, we break pre-market highs. I get through this level. I've got nothing. I've got nothing here. Notice how there's no crazy squiggly different colored lines above me here. That's because it's telling me there's no supply. Now, again, does it work all the time? Of course not. If it did, I'd be a fucking multimillionaire, right? But again, I've done it long enough to where it works more than it doesn't. So immediately I get in there, I take those, what was my measured potential? 212. I took the 212.50 calls, right? Took the 212.50 calls. I took 10 of them. Once we broke the pre-market high, this explodes, and within the first 5-minute candle starts to shoot up towards the high of 211.70. So immediately as we push into that 212, I sell half size, I get down to 5, I cut my risk down, and then it starts to confirm that opening range 5-minute candle and starts to push up, and I just sell the rest of the 5, okay, as we start to approach this 212s. That's it. That's all I was looking for. And the only reason why I sold into those 212s is because on the hourly chart, if we got over pre-market highs of around 209 and some change, it had room to 212. I look at the 5-minute chart. There's nothing here other than this linear regression. I'm going to take my analysis. I'm going to push my chips to the middle of the table. So, and then yes, I will obviously look for 20 SMA plays on. I will look for 20 SMA plays on options as well. But normally what I like to see on the 20 SMA plays is I like to see us come back down into a support. Like, so for example, you know, I wouldn't have taken any of these shorts 20 SMA plays. Why? Because we're kind of holding this linear regression. We popped, we came back down, we're holding it. There's a lot of support here. I'd rather be long on Tesla. So I'll wait for this, something like this, 8:45 Pacific Standard Time. I've got the 5, 10, 20-day moving average below me. I've got the 50, I've got the linear regression. I've got a lot of support, right? So at 8:45 in the morning Pacific Standard Time, this sets up a 20 SMA play. At 8:50 Pacific Standard Time, it confirms I get in, use a previous 5-minute candle as a stop, or use a closure below any one of these moving averages, any one of these supports, depending on how much I want to risk, get in the trade. Now, what I do as far as my take profit is I associate my take profits with the ATR and kind of go like 1-to-1, right? So if the ATR, average true range, of a 5-minute candle on Tesla is around 94 cents at this particular time, right? It was around 94 cents, 97 cents. If I can get 80 cents, 90 cents, $1, what do you think I'm going to do? Right? Anyone answer that? I'm not even going to continue. What am I going to do if I can get 80 cents, 90 cents, $1? What am I going to do? Nobody wants to answer? Thank you. I'm gonna sell. I'm gonna sell. So that's how I work the 20 SMA plays on stocks or options, right? Because if I can see that the average true range, if I can see that the average true range is around 90 cents, right? And I put myself into this trade 5 contracts, 10 contracts. If I can scrape off 80 cents, 90 cents, a dollar, I'm gonna sell. Now, can Tesla come up here and go all the way up to high of day? Absolutely. That's not me. I'm not that type of trader who's looking for Tesla to go trade from 214s and trade into 215, 216, into tomorrow. That's not what I do. I'm a scalper, right? My average trade time on an options play is underneath an hour, right? And typically if it's going to work, it'll be 5, 10, 15 minutes. So that's all I'm looking for, right? Entry price on that 20 SMA play long should have been over 211, right? Over $211. And what we would be looking for is something like 211.90, 211.85, 212. And that gets tagged right here on this candle at 9:20. So this would have been a 5, 10, 15, 20, 25, 30, 35-minute trade here to get your 80 cents, 90 cents. And if you would have waited 5 more minutes, you would have gotten well over $1. Okay. So that's kind of how I look at those trades. Why did I not take the short setup here? I got too much demand, too much support. This is holding the upper level here. So I'm going to ignore the shorts. I'm going to look for the longs, right? For the longs. Now, again, I took my trade on Tesla this morning, so I'm not double backing on it again. I'll take my profits on the day and I'm not going to trade that anymore. That's another thing too. Like, if you want to get good at trading, you got to know not to be greedy. You got to know that, you got to take what the market gave you and just be happy with it. I'm not gonna sit here and try to take 20 million trades on the option side and give everything back. On options, I look for like 1-2 good trades a day. If I can find those 1-2 good trades, again, with stocks and options, it's a little easier. We can go through Apple, we can go through Meta, we can go through Google, Tesla, Nvidia, AMD, Amazon, Netflix, triple Qs, S&P, right? We can go through a lot of names. So the odds of you not finding a chart that looks good, whether it's long or short, is going to be hard. When you're trading futures, we've got one chart to look at. If you're trading NQ, if you're trading the ES, you've got one chart to look at. You're trading the Dow, you got one chart to look at. So you're kind of limited, but the only advantage on the future side of things is these things can move around a lot. You can scalp, 5, 6, 7, 8, 10 points and make really good money on it. The only downside to trading options is you got to have cash, right? You got to have cash. If you're trying to build up a small account, I would definitely recommend, if your contracts go up 20 cents, 25 cents, 30 cents, 35 cents, take your money. A $30 options trade in 5, 10 minutes, 15 minutes is a hell of a trade. The reason being is because when you get to where you're trading 10 contracts, 5 contracts, that $30 win is now 300, right? That's really good money when you can come in, spot an idea, spot a level, get in 10 contracts, 10 minutes later, you're out for $300. It's really good, right? Sometimes it goes up 50 cents, 60 cents. That's a $500, $600 trade on 10 options contracts. Okay. Could easily go the other way. So that's why I'm saying it's not like futures where you can take a bunch of losses and nothing really happens to you. You take a loss trading options or trading stocks, that $300, $400, $500 is real cash. So you better have the cash to do it. Personally, if anyone is looking to learn how to trade options, or maybe you have traded options and you're trying to get back into it, this is my opinion. Utilize the prop firms. I don't care which prop firm it is. Doesn't matter. Find one that works for you. Utilize the prop firms. Make some money. Get some payouts, not just one payout, guys. Multiple payouts. Get some payouts and start building up a personal account. Whether that's a personal account to trade futures or a personal account to trade stocks and options, doesn't matter. But take money from each and every single payout that you get and start building up your own personal account. Because that should be the end goal for everyone. The end goal for everyone should not be to have to rely on prop firms. If you already make money on a different avenue, then yes, adding prop firms to make more money to your bottom line is great. I definitely recommend doing that. Multiple streams of income, having different options available. But for my example, I trade options. I have a healthy account that keeps me able to live my life and doing what I'm doing over here. Great. But I'd be a fool to tell you that I don't like making money. So where can I make more money? Like, where can I add to my bottom line? Well, I can do a lot of things. I can start another business. I can go get like a part-time job. I can go do a bunch of shit. I can trade futures, right? So I look at futures as my second job, as a part-time job. If it's vice versa, where you're coming from prop firms, then I recommend running up a nice stack in prop firms and then now building your secondary income with trading stocks and options, right? Because if you can make $300-400 a day trading prop, or hell, $100 a day trading prop, and you can get $2,000, $3,000, $4,000 a month trading prop, and you slowly start to build up that personal account, and you can make an extra $300 a month, $500 trading stocks and options a month, well, guess what? Now you're not just making $3,000, $4,000 a month. You might be making $4,500. You might be making $5,000 a month, right? So you always need to have more money coming in. Any one of you guys that are trading right now would be a fool to say that you don't like money, because that's why you're doing this. You like money, and you like how fast you can make money, and you like the freedom and the opportunities that it can present yourselves, right? Because again, if you were, really cared about anything else other than the fact of making money, you'd be out there doing something else. You'd be out there doing brain surgery or something, right? Heart surgery, right? You'd be a doctor, you'd be a nurse, you'd be whatever else. But many of you like to trade because of why? It's like, it doesn't take a fucking rocket scientist to know that we all like money. So the more ways that you can make money, the better. We're kind of coming up here to this high of day. So I've got the high of day located right here on the NASDAQ at around 19,694. So all in all, we are holding, we are grinding to the upside. We've got about 25 minutes until lunch is over. If we do confirm breaking a high of day, there's a couple of ways to play that, right? So a lot of people don't like to take the breakouts on the first move. I typically do, but I have a very tiny price target. So typically, I might look for 5 to 10 points on that first breakthrough, because we always kind of break out, put in a high, and then pull back, right? So I try to capture money on breaking out through that high, and then I get out. The other way that you can look to do it is allow the high of day to get broken, allow it to put in a high. I don't care what the high is, 17 or 19,707. Allow it to pull back, and then your entry would be through that new high, 707, or whatever it is, right? Whatever that number may be. That's the other way you can play it. Break high of day, pull back. It's like basically like a break and retest. That's one way to do it. If you're like a scalper, then take the first move. But I'm going to tell you this: protect your ass, right? Protect your ass. Because typically, those first breakouts, you can make extremely fast money, but then a lot of people just get too fucking greedy, where it breaks out and they're up $200, $300, $400, trading a mini contract. And next thing you know, they think that it's just, they get stuck and they think that it's going to go to the moon. And then next thing you know, it pulled back and now you're down $300, $400, $500, and you don't know what the hell to do at that point in time. Right? So have a plan. If your plan is to take the first breakout, take your 3, 4, 5, 6, 7 points, whatever it is you may be, see green, take green, just get out of the trade. If it's to allow it to break, pull back, and then go, well, then have that plan as well, right? Right now, we're looking at a 32-point ATR on a 5-minute time frame. So also, guys, too, get your position sizing down, right? Get it squared away. You can make really good money. You can get yourself to payouts. You can get yourself to passing these prop firm evaluations with trading micros. You can also open up and expand those stop losses a little bit when you're trading micros, right? Especially if you guys are interested in trading the NASDAQ. You know, a 30-point range on the ATR here on the NASDAQ is a lot of cash, right? I mean, you're looking at 30 points on one mini contract's around a $500 hit. Do you want to take a $500 hit potentially to see the trade play out? Or would you rather take a $200 hit? Would you rather take a $100 hit? Again, if you're trading one micro and you're looking for, let's say, you know, something close to the ATR of 30 points, then you might make 50, 60 bucks, 40 bucks, 40, 50, 60 dollars a trade. But you're only risking 40, 50, 60 dollars a trade just to see the play hold out or play out. If you're trading two, you're risking about 120 bucks for potentially to make, you know, 60, 75, 85, $100 a trade. You know, you're going to get multiple setups a day here, right? Multiple setups a day. So again, you know, off the bell, like we kind of talked about it in Evolution Traders this morning, I threw out this 513 level, right? That 513, that pre-market high level, if it gets broken, we had space. It's sure as shit as soon as the market opened up. I mean, this candle absolutely exploded, 112 points. I mean, you could have even jumped in late over 513 and still made 510 points on that. The next potential trade, that was a 30-minute opening range break. Now that immediately broke that price of 652 and went all the way up to 685, right? So you could have taken your, you know, 5, 10, 15 points on that trade. The trade that I just took was at long for 10 points. So there's multiple trades, even if you're like, even on the last trade, right? 2 micros, 10 points, or whatever the heck I was looking at. Yeah, 10 points, right? On 2 of them was a $40 trade. Even if you were only trading 2 contracts and took $40 a trade today, that's 40 here, that's 40 there, that's 80, and then here's another 40 there, 120 bucks. In a couple of weeks, you're up 2 grand, right? In a month, you're up 3 grand. If those are your average numbers. Now, again, you're never going to do it every single day, but some days you might have more opportunities where you might make 200, you might make 300, right? And then your average loss day is going to be $150, $250 a day. That's manageable. It's manageable. I would definitely recommend everyone to trade micros. Yeah. I like that 4 to 5 micro sweet spot, right? Elder, what's up, buddy? Hey, you've been stringing together some solid days over there, man. Nice and consistent. Yeah, I was telling someone yesterday. I forgot who I was telling, but I said go through and look at Elder's P&Ls that he posts up. You're playing micros, aren't you? Yeah. Yeah. Exactly. That's what I was saying. I said, look at Elder's P&Ls. You know, 200 here, 300 here, this, that, and the other. And I'm like, I think he's playing micros, you know, but his numbers are the same. It's the same. You don't see like, you know, fucking $1,200 day and then a fucking $600 losing day. You know, it's just the same. It's just the same. Yeah, that's how you blow the accounts, right? I mean, you do fucking stupid shit like that. Yeah, just slow and steady Eddie, man. That's the way to do it. Slow and steady Eddie. I fucking got him until next Friday, dude. The damn yeah, but the damn fucking the IV is crushing me, man. I mean, they're all down. So, but I mean, look, we touched those lows yesterday, and I knew it because that day on I was looking at those. You know, that 116 mark was a support on that daily, and they washed it. They washed the shit out of it. I mean, earnings were good. You know, they washed it into 116, and it's back up to 121. So there's nothing more I can do at this point. These damn contracts are down 75%, you know? So the only thing I can do is that hopefully that these things, they come back. Like, it just comes back. I mean, I knew going into it, I was going to throw $1,500 in. That $1,500 in was as good as gone, you know? So we see what they do. I mean, as long as they're holding over that 116, I've got some time, and maybe I can catch a play. Like, normally in this type of situation, I know what's going to happen for me is I'm going to just end up day trading the Nvidia options between now and next Friday to get this money back, and then just call it square from there. And that's the only thing I can do. Mm-mm. I don't expect anything to happen until after lunch here. There you go. There you go. Dude, what do you think about those old Top Step guys yesterday, man? Mm-hmm. Yep. And then I watched it a little bit more. Then they try to short. They try to short the pop, and the fucking thing kept going. It kept going up. They lost more. Yeah. I'm like, what the hell? I'm like, this is crazy. And then today they won some cash today. I kind of went back and seen like what did these guys do today? But like they are just strung out all over the place. And I don't know if it's good that they have all these like how many check marks we got? Check mark, check mark, check mark. It's like what check marks are you guys looking for? And then today the fucking the CEO was hammering that Andre fella because Andre's like, we got to get it now, 46s or some shit like that, whatever they were calling for on ES, they're calling for 46s. And then the MP, the CEO, I don't know if he fat fingered in or something because they were talking about running 30 cons, right? So they were asking for check marks, this, that, and the other. Where do we see it? You know, it was like, okay, 46 or whatever the level was, something 46, room up to 60. Let's grab it. So then they're like, well, check mark, where's it stop at? Well, what do we think? What's the tilt doing? They're always concerned about the fucking tilt, right? What's the tilt doing? This, that, and the other. And then he's like, oh, you hear him in the background when the other guys are talking. He's like, oh shit, I'm in long 30. And then he gets all pissed off because it went immediately against him. And then you can tell he was like, well, if I'm not going to have a stop, you guys aren't going to give me a risk. I'm not going to do the trade. And then you have some dude chiming in who's not even on the web stream. He's like, well, what happened? Because he's like, I'm looking at the account. We were in. He's like, no, I wasn't in. I said I was good. I was going to get in, but I'm like, dude, this guy got in. He got hammered, and then he probably just closed it out. And you could see that other fella, Andre or whatever his name is. That dude was all like, he's like, oh, we should have been in. And look at it. I told you guys a 60. He was all pissed off. I was like, dude, I don't know what the hell they got going on over it. It's just what it is it's too many opinions at once. And then they're asking chat. They're asking chat, what does chat think? And I'll tell you this, the chat is the last fucking people I would be listening to. I don't care. Like, I don't care how good of a trader you say you are in chat or what levels you're giving me. If I don't see it, I ain't taking it. Oh, they love that fucking tilt. And then they're like, well, we should start shorting here. NASDAQ, we're getting a close here, guys, under the 20 on a 5-minute time frame. Pretty big range here. Oh God. Yeah, they're like, oh, the tilt NASDAQ is long 88% or 82% or something. We got to go short. So then they just start, like, it's basically like right now, let's say, whatever, 82% of the tilt is long. And they start saying, okay, time to short. So then they like throw out a level, they'll get short, and then the fucking thing's still going up, right? Like, I don't get it. I don't get it. Yeah, I mean, it's like, and that's the thing. It like, I get it. Levels are key. What are some of these previous week, previous day levels? I get that. But if every day you're just waiting on these levels, or you see these levels, but then you're trading the price action against those levels, every day is going to be different. Like, there's no one real particular thing in that strategy that you're looking for other than these levels to get hit. Yeah, like check marks, check marks. How many check marks we got? We got 2 check marks. Okay, we need 3 check marks. What's the third? And then they'll go to like, okay, what's chat saying? It's like, that's the third check mark, chat. Like, so if everyone said, yeah, there's one right there. Yeah, it's crazy. Guys, yeah, there you go. All right, buddy. Later. Hey guys, if anyone's playing that 2-minute chart, you had a very, very nice 20 SMA play there. Very, very nice 20 SMA play to the downside. I don't know if anyone's playing a 2-minute though. Your 5-minute is barely setting up here, so we're trading well below this. We're trading well below the 20 SMA on a 5-minute. I got this prior swing low wick here down at 19,590. So one thing that I would want you guys to be cautious of and mindful of is, if you notice this floor we had here, and I'll drop another line here. Again, I hate doing this because you can just start dropping these lines everywhere. But this last floor that we had is going to act as support. So that's around 615. Anything below 615 has room to 590s. So if this bounces, gets rejected somewhere in the vicinity of between here and this 20 SMA, and confirms the 5-minute 20 SMA play, realistically, okay, realistically, in the worst case scenario, all you have is room between 19,626 into around 19,615. So do not look for no more than between 5, 6, 7 points on this particular trade, right? Again, if it does flush below that, then your next price target would be 19,590. So if you're looking for a 590 test or lower, please be on micro side. Please be on, where you're trading just a handful, just a couple of them. If you're trading big size, anything more than 5 micros into minis, see green, take green environment, because it is still holding this area. We haven't really lost that swing low, and the buyers can still step in and push it higher. Okay. And we'll be coming out of this lunch hour here in about 4 or 5 minutes. So again, price action can, rip to the upside and we can finally take out this high of day, which I think will be a nice trade, or we can continue to flush down into the initial balance, which is sitting around 19,581. So all in all here, you've got it's not the cleanest of price action to speak, okay? If you're not really seeing it, right? Like if you can't really put the analysis together to see, where potentially you should be going, my best advice is just sit out, right? And just watch it play out. That way you can learn, right? Good screen time is learning, right? Putting yourself mentally into these trades and learning. Because if you're not seeing it and you're just kind of like, well, maybe, then maybe you're gonna lose, right? And then how are you gonna react when you lose? So keep the mind in check right now. You got plenty of time. You're not missing out, right? Exactly. Find your hands, sit on them. You can't find your hands, I don't know. Roll over on the floor and start looking for them. Do something. But all in all, you've got to see what's going on, and it has to make sense to you first, right? It's got to make sense to you. If it doesn't make sense, there's no trade, because at the end of the day, it's your money on the table. It's not mine. I could care less if you guys make or win money. The same way you guys should feel about me. Like, we're not in business together. We're not in business as competitors. What I do has nothing to do with what you do. What you do has nothing to do with what I do, and it has nothing to do with the next person. Don't ever let someone else's sway or bias or reading of the charts sway you. You have to learn on your own, and you have to see things on your own and be able to trust it. And that's the main thing. You've got to be able to identify what exactly it is you're looking for in these markets on your own. And the only way you can really do that is by practicing, is by taking the trades when they present themselves. And whether you win or lose those trades, well, then when that trade is over, you analyze it. You journal it. You start asking yourself questions. What could I have done better? What could maybe I do differently next time? How could maybe I manage my take profit a little bit better so that it does work? How could I maybe manage that stop loss to where I don't lose as much, right? Or how can I just not do anything at all to just protect myself entirely? It's just a never-ending conversation going on with yourself that needs to be happening. Got this 20 play looking to try to confirm here. I might take a stab again, couple micros, 10-point take profit. Any of you guys play fantasy football? Got a bunch of leagues ready to draft this week. I'm kind of trying to do some research. Looks like we're holding here a little bit of this double bottom on the wick. I might cancel this order if I see it get back over the 20 SMA. Nice trade. 2 trades. Nice trade on that. I'm assuming you took I got too many lines going on here. You took this breakout here, this breakdown here. Let's go. Good scalp, because any scalp right now is going against the trend, even though, you know, we're not pushing higher. It's we're still kind of like holding this whole big like trend here. We'd have to, like, in my opinion, again, it's just an opinion, I'm looking at 19,590 to get broken for me to tell me that this uptrend is kind of invalidated now. Maybe there's more potential downside. So if I start looking at my big chart here, I've got support down here at the 50 on a 5-minute time frame. I've got support down here at the 50 SMA 615s. I've got overhead supply 650s, 653, 660s. So if this starts to push over 660s, then maybe we get that again. It'll be the fourth time we're testing those high of days up there. If it does continue to pull back, I'm looking at something in the 616s, 620 area. Anything below this 50-day moving average, look out. Still flirting here. Still flirting. Stay patient, guys. Stay patient. Stay patient. Stay patient. Because we still got that floor sitting down at those 613s. Again, even if this little bottom breaks here, I still think see green, take green environment. Because if it quickly, again, how many times has this happened where you get into a trade and it just wicks so fast in a blink of an eye and it shoots back up, right? So I would recommend have a hard take profit. That way, if your 5 points, 10 points does fill, it does get triggered, it fills, versus having to manually click the buttons. Because sometimes we freeze, right? I've seen it happen many times where a trader, it'll go down 5, 6, 7 points quickly, and then you freeze because you're like, oh, it's going to go more. And the next thing you know, you're looking at this trade going against you 20 points. Personally, for me, because this, like, again, if I'm just shooting the shit, talking to you guys in the garage, the bulls haven't shown me that they can take out the high of day. Let's flush this thing. Let's get down into 600. Let's get down into 580s. That's a bigger, juicier trade, right? That can happen fast. They've had multiple attempts to push this higher and they can't. So instead of flirting with me, right? Instead of me, buying you a bunch of drinks at the bar just to tell me that you're married, instead of doing that, how about you just flush me out here, right? That's what I'm looking at. How about you just flush me out? That way I either know yes or no, right? Yes or no. Is this going to go down or is it not? So, I mean, like, that's the way I look at it. Like, that's the way I look at it, right? I mean, they've had multiple opportunities to take out the high of day here. And then if you want to go long, you can look for a bounce somewhere in the 80s, somewhere in the 90s, somewhere down there. Because I mean, I'm just saying, it's hard out. It's hard out here, right? It's hard out here in these streets. So there, hey guys, I'm in on the trade here. Got filled, so I'm in on, and it's filled. 10 points. There it is. Another $40. Another $40 on 2 micros. Sorry that I flipped over to the damn trader bait so late, but it was filled. There it is. There's the flush. How many of you guys took it? Let's go. Let's go. We just talked about it. Have that hard five. Have that hard five. 10 point, 15 point, whatever the hell you have, right? Again, everyone's different. Chris, we got to have it in there. We got to have it in there. Just when you see the level, right? When you see that level, and you see us, you see us flirting, right? We were flirting. Now, could it have gone to the upside? Sure. You got that little level there, and you see potentially if it does break that level, we've got some space. We've got to just put that level out. We got to put that trade out there. We've got to let it sit, right? We've got to let it sit out there. We already see that prior floor, right? Let me go back to the chart. We already, why the short? Why the short? Look at this. Look at this chart. Look at the short, right? For one thing, we're below the 20 SMA. Okay, so I was just playing my strategy, 20 SMA strategy. We closed below the 20 SMA at 10 o'clock Pacific Standard Time. That low price is 19,623. So that level's here. I did have a 50 SMA support system sitting here. So if we do confirm that, I gotta be mindful of that it might touch this and snap it. But here's a little footnote, guys. A lot of times the NASDAQ, it overshoots supports, it overshoots supplies. So even if it does overshoot, I had room here from 623 into around 616. What were we talking about? That level, I think it was 613 I was saying, right? I was looking for 613. That was potential, right? Because why was that potential? Go back to 8:20 in the morning. Look at this. I'm going to drop this line here. My chart's going to get more cluttered. But you see that? See this line down here? We're looking at room into the 590s, 580s, right? And we came pretty close to that. Okay, great. Look at, I don't even have the VWAP on my chart, but there it is, right? So someone says we came into the VWAP, right? So the why short is because, like I said, the bulls had so many opportunities, right? And they did a fantastic job off the open. They've done a fantastic job. I'm not taking anything away from the bulls here, but we put in a high here. We put in a high here. We almost touched that high. We touched it again. We touched it again. 1, 2, 3, 4, 5 opportunities to take out this whole damn high of day and continue. And because we couldn't, the more times you test, either the bigger the breakout when it does break out, or the stronger the chance of the possibility that this thing pulls back. So once we started to close below the 5 and 10 day moving average and the 20 day moving average here, this is telling me we got a potential short into this prior swing low, right? Into this prior swing low. And that's exactly where we came down to, is that prior swing low. So again, if you were following the 20-minute SMA play here, well, then when this got confirmed, you were getting in, and that was on this candle here. We confirmed it and we flushed, right? We flushed. From the 20s all the way down, I mean, geez, look at that move. 623 all the way down to, what was that? 598. We're talking about 25-point flush, 5 minutes. Hell of a trade. No, you don't have to be sorry. I'm just saying, like, that's why we were looking at the short, right? That's why we're looking at the short. You know, failing to get up there, right? We were failing to get, like, break high. So Husky in our room caught it for 10. Good job, Husky. Total $808. Lock that account up. Lock it up. Husky's up 800 today, guys. Lock it up. Everyone throw some love Husky's way. So that's the thing too, guys. I mean, we're still kind of holding down here now. We're under the 50 on the 5 minute. Again, I think I mentioned it, but a lot of times I talk so fast I can't hear what's coming out of my ass. We are going against a trend here because the trend is higher, even though it's trickling around and even though it's kind of pulling back, the trend is still up. And how do I know that the trend is still up? Well, because we haven't really closed below any of these prior swing lows, and we definitely haven't taken out the day's low. So the trend is higher. So we're going against trend here on the shorts. So my mindset goes to, if I'm going to take a setup that's going against trend, I'm only thinking scalp. I'm thinking see green, take green. And I'm thinking 5, 10 points max. That's it. 15 points max. But I mean, I was just looking for 10. And again, we go back. How am I managing my day right now? I'm at 4 total trades, a total of profit of 620. Okay. So I'm managing these trades, just taking these baby 2 micro contract setups at $40 a pop at 10 points, because I'm not going to give back shit. Even if I lose, I'm going to give up $100, $150. Fine. Then I will call it quits. And that is right. There's always another trade. So always another trade. So even if you missed it, what are you going to get upset about? There's going to be another one. I've been trading for 10 years, guys. There's never been a day in the 10 years that I've showed up to the market where there wasn't one setup. Isn't that funny the way that works, right? This is what was told to me when I was learning how to trade. If there was no setups, if there was nothing to trade, if there was no price action would just be, we wouldn't even have these bar charts. You just have a straight line going sideways. That's what makes the market up and down, up and down, up, down, 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 right? There's a setup every single day. So there's never a reason to get all emotional when we lose a trade. There's never a reason to get emotional when we miss the trade. For what? We're going to get another setup. Always think about the next one. Always thinking about the next one. Who cares, right? That last trade is over on the short. Where's the next one at? Where the hell can we make more money at? Where the hell can we make more money at? AJ in our room got $100 on 2 micros, up 1,400 today. AJ, shut it down. That's it, baby. That's it. We're done. Up 1,400, we're done. Take that and come back tomorrow. You can hang out here, but don't take any more trades. Action mode. Let's take a look at the hourly chart. Hourly chart's right at support. If we start breaking down, if we start breaking down through 19,591, we've got room to 65. If we break down through 590, I'm not going to take another trade because you know what? I feel like I'm pressing myself here today. But if we lose, I'm going to watch this out. If we lose 591, do we test 65? Now, on the flip side, you can take an opportunity at a cheap long here at support. I don't know if I like it, but it's definitely an opportunity to kind of get in here and use 691 or 591 as a stop. That's also a cheap long. But I think the bigger trade here is when we do confirm the highs. And again, that might not happen today. I mean, I'm willing to bet that it probably doesn't happen today. But that level, today's highs, is definitely going to be a level that we're going to want to be involved in. Over 695, over 700. That's definitely going to be a level we're going to be involved in. So if I was analyzing this, like, again, if this was an options chart, I'm licking my chops, and I don't care if it takes tomorrow. I don't care if it's next week. I don't give a shit when it happens. When this gets broken to the upside, I've got nothing up here. I've got nothing up here. I'm going to catch a nice trade once we do confirm this. Hopefully that's on, like, next week. But that's a level I'm looking at. Cheap, like I said, cheap long here at 591 as a stop. Yeah, I mean, I think there's more downside too. I'd like to see if it actually hits these 65s today. I'd like to see that because that would be a good trade. Below 591 into 560s. Getting a little bit of a bounce here off the 50 EMA. A little bit of supply here at this 5-day moving average and 50, so a little bit pinned. But okay, again, for those of you guys, this is a little bit of that Biggs bottom that we talk about in the room. So extended move to the downside, came into some support. You use the low of day as a stop. You know, I was kind of saying cheap long. You use the low of day as a stop. When green candle takes out red, you get in, you look for your 5, 10, 15 points to the upside. So this trade here would be active, right? Green candle takes out red, extended move to the downside, a little bit of a hammer candle that formed here, low of day as a stop. You try to take 5, 10, 15 points to the upside. You know, if one jumped on that, you're getting in over 618 to kind of make that point, and we went up to 624. So 5 points would have been hit here. Let's see if a 10-point guy would have gotten hit, gets hit. But again, you know, these are very quick scalps. You're just looking for that quick little bounce off of support. But again, definitely below the 598, you got room into 591, and then below 591, I'd be looking at the 565s. Ultimately, I'd like to see it before this day's end. What I'm really waiting for is to see if this trade plays out. The short through 598.91 goes into 565. That's what I'm really looking for here. We'll see. Anyone take that bounce? Cheap long there. You got a little bit of supply sitting here at 637. Take some sea green, take green. Sea green, take green. We got coming right into that supply zone. But do you guys, for those of you guys who are in my room, do you guys see how that Biggs bottom plays out? Extended move to the downside or extended move to the upside. Extended move to the downside into a level of support, in this case, 50 SMA EMA. Okay, no continuation, right? No continuation. You're looking for a doji or a hammer, inverse hammer, if it's moved to the upside. Then you're looking for green candle, take out red, low of day as a stop, scalp 5-10 points. So entry price over 618, 620, and it went all the way up to 631. So you would have taken 5, you would have taken 10. Quick trade, quick scalp, use the supply and demands to your benefit. That's it. Everyone should be out of that little scalp. Well, in that particular situation, it's not your fault, right? So, as far as affecting the mindset, right now, what we're feeling is a lot of emotions due to the fact that we're down 547, right? So because you're down 547, that's what's going to trigger emotions. As far as how do we overcome that, you have to understand that you were yes right on your particular move, on your particular setup. The only thing that needs to change is we've got to double triple check. And again, I always recommend this to the people in my room who have copy traders. Guys, we've got to double triple check that not only are the positions closed, that they didn't reverse or anything funny happening, and also, if even if you're not copy trading, we just have to make sure that we've got no floating orders. I don't know how many times I've heard of people, they've had some winning days, but they put like a stop order in somewhere in the day and they completely forgot about it. Shut the computer screen down. That order got triggered at some point in time. They've lost their accounts. Um, so again, better to be down 500 than to have a blown account. Easily can be managed and battled back in 2 to 3 days. It sets us back 2 to 3 days. Never is a good feeling, but we're still in the game, right? Electricity company didn't cut the power out on us, so it's not like we're not available to trade tomorrow, next week, so forth and so forth. First things first, just make sure we're always, double, triple checking our positions, whatever stop orders we do have out there, anything like that that could still, trigger after we leave the computer screens. But we can't really beat ourselves up too bad because it's not like you were up on the day and then over traded and went from green to down 547. Like that's something that we can control, that we can start to work on and fix, because that's a mindset problem as to why we didn't stop trading. But in this particular case, that's beyond your control because you personally, as a person, as a trader, didn't do anything wrong. So we can't really beat ourselves up on it. For me, if it happened to me, I take 5-10 minutes, I reflect, I let out all the emotions, turn the computer screen off again, and I forget that it ever happened. I don't look at my balance tomorrow and dwell on the fact that I'm down $550. I act like today never happened, and I just let the next 2 to 3 days regain that negative and go back into the positive. That's it. We move on. We forget about today ever happened. We do something else. You find something enjoyable to do for yourself today. Take some time to do something for yourself that gets your mind completely off of trading, to forget that we had a technical difficulty happen. That's it. That's it. Those things will happen, but we can't beat ourselves up on it because it's not like something that we did wrong that we should have controlled better. It's just a simple technical error. In the future, we just got to make sure we double triple check that we've got no orders floating out there, our positions are closed. That's it. Hey, what's going on, Marie? Good idea too as well. I think I'm gonna cut this live stream, guys. Just got a text. I got a close friend. I got a close friend. Her dog's been a little sick. 3 years old. They just found out she has cancer. It sucks. 3 years old for a dog. It seems kind of early to have cancer. But I'm gonna cut the live stream, guys. I'm gonna give her a phone call. See what she's doing. Stay safe, guys. Don't overtrade. Make sure you guys are definitely double triple checking for the mental state, as far as playing out trades mentally. Let's see if this bounce holds, right? If it does, you know, it'd be a pretty good area if someone got in. But ultimately, just for my curiosity, I'd like to see if the 98s and 91s ever get broken today, and then if it does touch 65. Yeah, thanks for that. Yeah, it's had problems. They originally thought it was got sick about a month ago, and then they diagnosed it with hip dysplasia and arthritis because it was having trouble with the hind legs. At 3 years old, it's a German Shepherd, and but it's just in severe pain. So they kept doing more tests, more X-rays. They found some masses on the spine. It looks like they say it's got widespread bone cancer. They said, but for 3 years old, it seems crazy. 3 years old seems crazy. But let me give her a phone call and see how she's doing, and then stay safe out there, guys. Again, if you're green and you're going to take any more trades, just manage any future trades against your P&L. Right? Manage any future trades against your P&L. So if you're up 200, risk no more than 100. If you're up 300, risk no more than 150. Yeah, it's terrible. It's really terrible. It's good, very good dog too. Very nice dog. Gosh, that sucks. Okay, guys, let me get off this. I'll catch you guys. I'll probably be on tomorrow. Catch you guys tomorrow.